How about that? Thank you, Dan. This is why we sped up the latency so I can get it nice and clear. So there we go. Now we've got sound. I can see it popping. Thank you guys for that. All right, well, welcome to the Trader Merlin Show. Sorry I didn't get to do a show yesterday. I got back late last night from the Money Show. Today's topic is going to be, obviously, Nvidia's earnings. I know they came out last night, but that's okay. There's still a lot to unpack there. But before I do, you guys know that I was in Las Vegas all weekend, basically Sunday, Monday, Tuesday, Wednesday. Yeah, it's great to be back. And, when I do these shows, I don't know, it's always fun because I get to go and educate. And for those who were at the show, thank you. It was great to run into some of you and make some new friends along the way as well. But it really makes me, I guess, happy with what I do. Because as I go around these exhibit halls, there were many individuals, will say, that were basically snake oil salesmen, right? They were talking about stuff that if you know anything about financial markets, they shouldn't be saying. They're regulatory violations, they're false promises, and they're selling pipe dreams. And as you guys know, I'm a realist, and sometimes almost too blunt in critiquing and identifying if things are unrealistic. So I had a lot of people, and I mean a lot, would literally stop me in the exhibit hall as I was kind of walking around and say, hey, I want to say thank you for your honesty, and it was just so refreshing to hear someone like speak truly about the markets. And actually, when I was giving presentations, my goal, as you guys know, is give you something of value, right? You are committing an hour of your time every day to do this show, which I thank you all so much for doing that. You don't have to be here, so obviously you're getting something of value out of it, and maybe you feel like you're part of a community. That's wonderful. I feel like you are as well. I think that there's just so many people that don't give you anything of value, and they're trying to sell you some bullshit. So, yeah, but I think they try to. I think they do try to police it. It was a lot better this year. I think in the Vegas show, this is probably one of the best ones I've done. Granted, one of the things I love to do, and I think you guys know this, is I'm very quick on my feet and thinking on the fly. I was supposed to do a panel with some individuals, and as I sat down waiting to do the panel, I got there like an hour early. I looked at the schedule, and I was supposed to be the next presenter before the panel, on top of doing the panel. So I had to, within 15 minutes, I whipped up the presentation and just knocked it out of the park, and they all loved it, so it was fun. On that note, I had the opportunity to meet some incredibly awesome people. You guys know I'm not going to bring people on this program that I think are garbage, charlatans, snake oil salesmen, just bad people. I just can't do it. And every now and again, one might sneak through the cracks because I, don't know 100% of everything. But I got to meet a couple people. Matt Haugen is the CIO of Bitwise. This is a major ETF and financial investment service. This guy was sharp. He was on my panel. Also had the opportunity to interview him later on in the show. Phenomenal. Really in touch with where this industry is going. Another one that was just off the charts impressive was Andrew McCormick. He's the CEO of eToro, big exchange, and of course going into crypto as well. Just an outright fantastic guy, and a lot of great information. So I'm hoping to bring those guys back on. Also, there's another one called the Thinking Crypto Podcast, who has, I guess, a couple 100,000 followers, which is somewhere I would love to be at some point. Tony Edward, just another great guy. We had dinner together and just shared a lot of ideas, and hopefully I'll bring him on my show. I'll go on his show as well down the road, and some reciprocity here with regards to sharing our knowledge on each other's programs. So it was a ton of fun. For those who have not been to one, I would encourage you to go. I think you just have to have thick skin and understand that there's people trying to sell you stuff almost everywhere. Did you go with these? I will be at the one coming up here in Hollywood, Florida, coming up in a couple months. I'll also be the one in Dallas, Texas. So if you guys are going to be around there, let me know, and I will hopefully get a chance to meet you there and have some fun. Okay. Yeah, there's the picture. The red suit was fun. You like the red suit? Thanks, Big Ab. I make it a point, I had all these Thai suits, these suits I had made in Thailand. And most of them don't fit anymore because I just got too fat, as happens as you get older. But because I've been working out, dieting, and exercising, and really setting my goals on achieving two things. Number one, I want to run the Spartan race in April. And number two, I'm going to do the High Rocks competition coming up here soon as well. Probably Anaheim in December, but I'd like to do it before then. And yeah, we'll see how that goes. If you guys don't know, High Rocks is absolutely brutal, but we'll see if we can do it. But yeah, I try to dress nice every day, and now that I've lost weight, some of those nice suits I bought fit me. So I wore nice slacks and a matching vest every single day. The red one was just a little bit loud. All right. Enough of that. Let's dive into the topic du jour. If you guys have questions, feel free to just type them on in. If there's something you want to know about the Money Show, it was really good. And actually, the biggest shout out needs to go to Kim and Charlie Githler, who put this event on. Did a tremendous job. I think the undertaking to bring that many people together in one spot, not just the attendees, but these financial experts from around the world in every asset class, from natural resources to cryptocurrency to stocks, options, futures. That was great. All right. So let's talk about Nvidia's earnings. I saw a great comment earlier, which I totally agree with from Dan. He says, I'm really starting to wonder, why have earnings reports? Many beat earnings and then drop like what happened today. Makes no sense to do better than expected. It's all about expectations versus reality. And then the buy the rumor, sell the news on top of that is what makes this challenging, Dan. So let me run through some of the numbers here for Nvidia. The numbers were smoking hot. Like if you're an Nvidia fan, you got to look at these and go, what the heck is the problem? Why do we do this? So first thing, Nvidia recorded a quarterly revenue of $68.1 billion. Quarterly revenue. Some companies would dream of having this as an annual revenue. That was up 73% year over year. That to me is an unbelievable rate of return. I mean, when you get revenue increasing 73% per year, that is phenomenal. I think we have some business owners in the room, and I'm willing to bet you that if you had 73% year over year growth for your company, you'd be high-fiving each other, patting each other on the back, giving bear hugs in the break room, like, man, this is awesome. Nvidia just keeps doing it over and over and over again. And I think that, to Dan's point, well, why? I think many people look at this number and go, that's just not sustainable. And I would agree with that, but we still are in the early phases of this AI boom. So for now, I think it is sustainable, just not forever. All right. Data center revenue, largely AI driven, hit a record of $62.3 billion. That was a 75% year over year growth. Phenomenal. And as Big Eb says here, Nvidia's forward PE, that's the important one. Forward PE is 25. What's the TTM? What's the trailing 12 month? That's a totally different one, which makes it much higher. So these are both fantastic numbers. We look at their full fiscal year, $215.9 billion, up 65%. Really. So there we go. Trailing 12 month, thank you, Big Eb, is 45, which, let's be honest, 45 PE ratio in the grand scheme of things is not very high. I remember moments back in the late 90s and early 2000s where stocks like Amazon had PE ratios of over 1,000. And some of them didn't even have a PE ratio because they had no earnings. How do you have a PE ratio of no earnings? So 45 is not bad historically. And I have not updated my numbers for the past few years, but I remember when I was looking at this stuff regularly, like what is a norm number? The historical average for the S&P 500 was between 15 and 18. And I think that that's bumped up a little bit over the years, but still 45 for a company that has such explosive growth of 75, 73% year over year. That seems undervalued. Yeah, is it Carvana around 300? Wouldn't surprise me. I don't know. I don't really look at that type of metric anymore. The PE ratio is not really something I focus on because I'm more of a swing trader, so the long stuff doesn't really resonate with me. Okay, next. I wanted to bring up the earnings per share because this is also real rosy. You notice the green moon and the hollow moon, if you will. Notice that the most recent one on the right-hand side, it's pulling away from expectations, and it looks fairly linear. It seems to me that, you notice here the expectations for Q1 of 2027 are just above $1.50. Well, they came out with earnings per share that were far above that. We came out, here's the numbers. We came out at 162 versus 150. So the trajectory, according to the analysts and expectations, is that this is going to start to slow down quite a bit. I don't know. I'm not sure about that. You look at the amount of spending that's going on, and I still feel like there's still strong growth out there. Maybe it slows down a little bit, but they've been beating earnings growth. And if you are looking at the open circle on the hard right edge, even if we came out at the exact same earnings per share numbers, we would still beat those expectations of the next quarter. So that they're expecting things to slow down quite a bit, but the earnings per share doesn't seem to reflect that. What other details? Gross margins, I had 75%, which I think everybody here in the business would look at that and go, man, I wish I was getting 75% gross margins. That is a phenomenal number. Net income, right around $43 billion. You had total revenues. We talked about this one, $215.9 billion. Yeah, right, Big Eb? It's a 75% gross margin on these kinds of numbers is absolutely crazy. It is. And we all know it won't last, but the question is, how long does it last? It's been lasting for years now, it seems. And until we see this frenzy slow down, I don't see it dropping. I do think it'll slow. I don't think you're going to get above 75. Maybe next quarter we drop to 73, 72, somewhere in there. But still, growth is absolutely phenomenal. So their revenue, total revenue was up, again, 65%. Revenue is expected to be $78 billion for the next quarter. Now, keep in mind that $78 billion is well above the expectations from all the analysts. The analysts are between $72 and $73 billion. So they've even given rosier forecasts here. Next. Putting in that they expected $72 billion on that one. So far, you've got to look at this and go, this looks absolutely phenomenal. Why is it dropping? A couple different reasons. Number one is there's that belief that this AI thing is going to start to slow down. And I am in that camp. I just don't feel like I'm getting those signs yet, right? I've talked about this several months ago, where at some point we're going to see Microsoft's CapEx, Meta's CapEx, Apple's CapEx, Amazon's CapEx spending in this space start to decline. And from the previous announcements from Microsoft, we're not getting that idea. That impression doesn't seem to be there. It seems like they're actually going to be spending more. So for right now, I think that the narrative that CapEx is going to start to drop is probably unfounded. Now, if we start to see the market slow down, granted, the market looks like it's poised for a rollover. It does look like, let me bring up some charts here so you can stop staring at my ugly mug. Turn this over to a daily. I go away for 5 days and I forget how to use my charts. Boy, I'm getting old. All right, let me go back up here to the SPX just so I can have that one on your screen. Actually, go ES. Here's the ES futures. So we are still stuck within that big yellow box you drew out a couple weeks back. Nothing really that overly impressive here. Just the fact that we're traversing through it. Now, if we get down below this box and get below that 67.71 I've been talking about, if we get down below that and get a close, then things might start to sell off. And if we get profit taking, then it begs the question. Because if share price starts to fall for Microsoft and some of these other big Magnificent Seven companies, then all of a sudden they may start second guessing how much money they want to invest in AI stuff going forward, as they might have cash flow problems or the share price is dropping. So for now, I have no problem with where things are at. It's just sideways and not very exciting. If we get it down below this level, then I might have a little bit more concern for the AI space. But for right now, it does feel like we're consolidating, and probability, as we know, tells us that there's a much higher probability of it breaking to the upside than to the downside. So still at this point, staying bullish. Les says, might be profit taking. Yep, absolutely. There's a lot of people that are looking to take profits on a big earnings announcements, right? Pretty much everything was positive. There was one piece in there that was negative, and this goes back to my pain point, if you will, my uncertainty about ChatGPT. So in the press release statement, there was a comment in there that went like this: there is no assurance that we will enter into an investment and partnership agreement with OpenAI, or that a transaction will be completed. Okay. Remember, OpenAI is using this to leverage their other deals. I mentioned they've only got, $20 billion worth of profit. Is that what the number was? $10 or $20 billion worth of profit. And they're making $1.4 trillion worth of deals. Now, if Nvidia backs out of this deal, that's a pretty significant blow to the valuation of ChatGPT, right? Because if Nvidia invests this $100 billion into ChatGPT, that's a vote of confidence. That gives them more valuation, more money, and it's like, okay, this is legit. If that doesn't come in, then the valuation for OpenAI drops significantly in ChatGPT. So this is something we'll have to, keep our eye on going forward. This is OpenAI ChatGPT deal with Nvidia, but this was in the statement, and I thought that was a little bit concerning because, again, if they pull out of this deal, OpenAI could start to crash. Remember, OpenAI has been making promises to so many other companies. We saw Oracle. Let me bring up Oracle for you. We saw Oracle being the beneficiary here. They're going to do a bunch with Oracle, and now look at the price of Oracle. I mean, Oracle, since that announcement was made, has dropped roughly from where it was at the peak to now 57%. And it wasn't exclusively the deal that was announced by OpenAI, but this is what caused that spike back here on the 10th of September was the OpenAI deal. And now he went from the richest man for one day, Larry Ellison held that title, put a little trophy on his nightstand because he's not the richest anymore. Bam! Marsha says, too much competition. Well, I think the true story here is you have so many other chip makers around the world that would love to compete directly with Nvidia. However, Nvidia is already leaps and bounds in front of them. Now, I am hearing about Chinese companies coming up and competing and making something that's very comparable, and same thing with maybe AMD or Broadcom. You know, they're creating devices that are getting closer, but every time they get a step closer, even if Nvidia takes a half a step further in front, they maintain that lead. And I think that there's quite some time before the whole industry catches up with what Nvidia is doing. But remember, it's not just the chips. Their their data centers are what made them a ton of money. And those data centers are what bring in the customers, because you could have AMD's processor, which is powerful. Not as powerful as Rockwell or the Blackwell chips that Nvidia has, but they're very powerful and much, much cheaper. However, you get the suite of Nvidia products that are on that CUDA network, right? That's their proprietary language, and they have every product that I would need and service, whereas AMD does not have those features yet. So it's really the suite. It's the suite factory that I think is going to keep people coming back to Nvidia, where you can be this one-stop shop, and I get the chips, I get the data centers, and I get all of the services and applications I need built into the hardware. So I get the hardware and software deals by going to Nvidia, where the other firms are just trying to catch up on the hardware side, not software. Steven says, OpenAI failure could start a market 20% correction, in my opinion. I think it could be bigger, Steve. I mean, I've been saying this, and I know Ollie's not here today because he would be all over me, but he's like, you're the doom and gloom guy. I'm bullish on a lot of different companies. I am bearish on OpenAI. I think that there is going to be a day of reckoning when you can make all these promises, and I think it could have a bigger than 20% impact on it. The challenge here, Steven, will be if we get that moment where the industry says, let's stop spending for a little bit. Just we spent enough. Let's just stop for now. If that couples with the failure of OpenAI, which would be a lack of promised spending already, then I think it does act as a catalyst. And yeah, 20% could be a very realistic, downside move, especially if it starts to trigger most of these AI companies. Now, if we were to go in that doom and gloom scenario, which I'm not in the camp of yet, where does that lead us? Well, from today's levels, let's just map out what 20% down from today might look like. Just a little what it could do. Now there's 31%. So 20% decline, really, I know it would suck. It would certainly have people freaking out. It would still bring us back into levels that were from mid-2025, from May of 2025. It's really not that big of a deal. That would be just a standard pullback, it seems like. So 20% I think we're due for. Definitely 10%. I think we're long overdue for a 10% decline in the market, but 20% or possibly even more if we get that knee-jerk reaction and money starts pulling out of OpenAI. And think of this, what if it's not just Nvidia? What if other companies also say, hey, we're not going to be pledging there? Rick says, do I think software has more to drop? Oof, man, this is such a difficult topic. I mean, let's just go to something like a Salesforce, right? I mean, there's so many different ones. You can do ServiceNow, Salesforce. I think that they're going to survive, right? I think software companies will survive. The main narrative here is that AI is going to just destroy the entire model for all service as a software platform. And I don't know I don't buy that. I think that there will be a reshaping of the industry. I think that they'll come to a new valuation. And I think that in a broader picture, these companies, these software companies, these service as a software companies really had their day in the sun. And I think that they may have been a bit overvalued and due for a correction here. If I zoom out, let's go out to a weekly time frame here on, let's say something like Salesforce. They were pretty overvalued. I mean, they were up at $360. They were great trend, but just got a little bit overstretched. Does this bring them back down into some normal valuation? Some people would say, well, let's look at the 200 period moving average to see where we stand. All right, well, I'll throw a 200 on here. And we are right now well below that 200 period moving average. So I don't know. I think right now, Rick, we've got to be careful because there is this herd mentality of fear and greed, right? We see it happen in things when they rip to the upside and certainly when they rip to the downside. Right now, looking at, something like Salesforce, let me see if I can get ServiceNow in here as well. Oops, be stocks and go. There we go. So here's ServiceNow. I mean, ServiceNow is getting annihilated as well. So I think if you try to buy these now, you're playing with fire. The emotion is still way too strong to the downside. I think they will recover somewhat. I don't think we'll see ServiceNow back at those highs anytime soon, but I do think there might be some stabilization. probably within the next 6 months. But I would personally I feel like this is going to continue to drop here just because of the price charts. It actually looks like a bear flag, and a really strong down bear flag at that for service now. So yeah, there's a lot of different ones out there that are in that pain point. I think they will survive at some point, but I would not be putting my neck on the line now trying to take a stab at these. Now look, if you're someone who says, hey, I'm looking to hold for a couple of years on this, then maybe you buy a little bit now and maybe you buy a little bit, in a few months and see where it goes and dollar cost average into it. But I do think you'll see them continue to drift lower. Yep. There's so many more that are getting just beat up badly right now. And a lot of this is based off the AI fears. I have a couple friends that are pretty entrenched in that industry as well. And they're of the general opinion that I am, which is they'll survive. They'll just have to adapt and tweak their business models a little bit to accommodate the AI. But AI is not going to take them away totally. It'll take away pieces of their business. And maybe that's what we're seeing now. It's just a correction in valuation. All right. What else did I have here? I guess I'll go through our top 10 here just for fun since we're on it. Had a pretty rocky weekend for crypto. This is the weekly time frame, so still not feeling very confident on it. I had so many people at the conference that were just pushing me, trying to get me to say that Bitcoin's going to rally and go back to all-time highs. I'm sorry. You guys know I'm not in that camp. If you look at the price chart here, the candle that happened yesterday was certainly an anomaly. It broke us out of this kind of sideways range, but we still have not broken above this candle that goes back to February 9th, and that high price on that was $72,760. So I'm not that confident that we're going to get out of that. I guess I could redraw this box if you would like. We'll put that down here, and I'll redraw that to snap. So now that box is there. Maybe even move that bottom up a little bit here, but yeah, I don't think we're out of the woods on this bad boy. And if the trend is your friend until the bend at the end, then we have not bent yet. So that would lead me to believe we're heading lower. I don't want that. I actually went back long Coinbase a couple days ago, Thursday? No. When did I put an order in and got filled almost accidentally. I'll show you guys that trade here on Coinbase, but I'm back in 1,000 shares at Coinbase. Oh boy, play with fire again. So Bitcoin is down 2.51% today. Still at 67,770, which is not too bad. But if we get down below that yellow box, I think we're in deep trouble, which is 60,000. We've got another $7,700 to go before we get out of that one. So we're okay for now. Of course, Nvidia's big slide today takes out the NASDAQ. That dropped at 1.11%. And I'll show you the Magnificent 7 list here at the side. Most of them down. You had Nvidia was down 5.4%. Tesla was down 2.1%. Google down 1.8%. Amazon down 1.2%. Apple down 0.47%, and a couple little stragglers to the upside. Microsoft up a 0.25 percentage point, and Meta up 50 basis points, 0.5%. So NASDAQ, even though it had a pretty ugly down day today, still maintaining gains because the week's been pretty good for the NASDAQ overall. One down day doesn't really destroy everything, but 25,081 is where we currently sit. Technically, I don't see anything here that's that exciting at all for the NASDAQ. You had your 10-year bond, though. You had mortgages to some significant lows. I saw something talking about 6% mortgages and possibly even getting lower than that. That's great. Good news for economic growth. If we talk about the trend is your friend till the bend at the end, we broke the trend here back on February 12th. We could put a moving average or draw lines across the lows, which started back here in October of last year. And we certainly now have made some new lows, which from a market perspective you would want, right? You want lower yield. You want that 10-year to be as low as possible. That would stimulate economic growth. That stimulates housing sales and new home sales and pending home sales. So this should be pretty good in our upcoming housing data, which will be coming up here in a couple weeks. But right now you're at 4.01% for that 10-year. And if I bring up, I'll go back to me so I don't have to do all the searching with you guys there. Let's go to 30-year fixed rate mortgage today. Just curious what they are. So right now, mortgage rates 5.98. So we're tipping down below that 6% mark. And I want a historical chart here. Let me see if I can get you a nice historical chart of this bad boy. There we go. So we're definitely starting to drift lower, which is good, right? We had that big spike up from 2020 on, and now it looks like we're slowly drifting lower. I think if we get down below that 6%, that's going to really start to become a factor for more positive numbers for the housing market, which I think we would need. I think we would definitely need that right now. Jeff's always the runner-up for the Bitcoin Gold. I still need to get my embossed letters so I can pay out the winners here. I have some items there. Once Bitcoin breaks the next level in March, Trump will step in and save it. We shall see. He hasn't done anything yet. He's got some bigger fish to fry at this point. Bigger fish to fry. Okay, so let me get rid of that. 30-year fixed rate mortgage. Got that. Let's go back to our charts here. Gold. Meh. I mean, from a technical perspective, okay, it certainly has a footing. It feels like it's continuing that uptrend, but there's nothing really over the past 3 days that makes me say anything exciting about what's going on with gold. We were down 0.61% today, closing at 5,194. Getting closer to the podium, we already looked at this chart, but S&P 500 was down 0.57%, 69.20. Again, stuck in a big old range here. Who cares? Wait till it breaks out or do some spreads here, do some butterflies, do some iron condors, whatever you need to capitalize on this range-bound market that we're in. Crude oil, the dangerous one. Talked about this one getting higher and higher and higher based off tensions, and that is what's been happening. We have been down for the past 5 days, actually 4 days, on crude oil futures, dropping down to 65.21 today. It's only 0.32% slide, so not that big of a deal. However, still overall in an uptrend, and for me, I find this interesting because I was looking back at this high point from September 26, and that high price was 66.42. Well, we broke above that. We closed above that. So when that happens, I was actually under the impression that we're going to see this thing continue to move higher. We're in the midst of a pullback now. We'll see if we get a little bit of a step up. If that does happen, then I think you're charging towards the $70.50 mark that we achieved back in July of 2025. So the stair step seems to be reversed here, and now price is starting to move up. Again, this can have a big impact on inflationary data, so we will see what happens here. Larry says, I'll continue shorting CL futures. Continue shorting? Careful, bud. You're going against the trend, at least in that intermediate term, right? The short term from December is definitely to the upside. So while it might have been great for the past few days, this thing could rip up here. And shorting when we have conflict potential with Iran, that makes it pretty dangerous. So be careful, my friend. Be careful. Number 2, dollar index, the old Dixie. It came right up to those levels we talked about, mapped out as a retracement level, was a demand zone, now it's a supply zone. Some of you may look at this pattern and say, Merlin, is that a cup and handle? Well, it is. It's kind of a funky cup and handle. You got this giant sell-off we had here back on January 27th. Then it came back up to that 98 mark, sold off, but not as low. Came back up at 98 mark. So it does look like a cup and handle or an ascending triangle here, which means building pressure for that dollar. As that dollar continues to move up, that should put pressure to the downside on commodities. So that might help you with your short there, Larry. Cool. Just it. Cool. Good. Good for you. All right. And finally, it wasn't all negative. Dollar was up slightly, but Russell was up almost 0.5% today. Still within that little wedge. It did actually close down below it. So technically, we'd have to readjust these lines, which I will do that. If we want to go through the tails, we can go through the real bodies. This is where, technical analysis becomes just more of an art form. You just where whatever looks like it fits the best. Just modified that lower band there, but still the principle remains the same. It's making higher lows and compressing. Because the trend is up, we should see that break to the upside and more bullish move for the Russell. All right. Russell will be the best index in 2026. Could very well be. I mean, it's been looking pretty darn good so far. Looks real nice. Other than that, let me go in. There was a question about Ethereum that I was received multiple times at the conference, and people asking me, can I evaluate it? When you look at the Ethereum price chart here, it doesn't look good at all. I am extremely bullish long term, right? There's no doubt in my mind that Ethereum is really starting to cement its place as one of the dominant players in the blockchain space, the crypto space, and decentralized assets. And now that you have other institutions are using this blockchain, I think that gives it more value. But there's just overall negativity in crypto. It's just a bearish sentiment overall. So what has it done? It goes right here. Let me draw a little box on this bad boy, and we're stuck within this little range. Come on, Merlin, you can do better than that. There you go. We're stuck within this little box, and Bitcoin has a very similar chart, right? It just doesn't look very strong, kind of sideways traversing action, fine. Until we get out of that range to the upside, I don't think I would be going long. And I don't think I would be going long on Ethereum just quite yet. Everyone asked me where I think it's headed, and I just kept telling them the same thing. Because of this chart here with Bitcoin, which is very similar from a range-bound perspective, right? I'll draw a box in there for you guys as well. It looks like it's stuck between 60,000 and 72. Okay, 12,000 is a pretty big range, but it really has not been able to break out of that range lately. So if it gets out below the bottom, then I think we're going lower. And the trend going into this for the past 5 months has been bearish. So that's where my bias is. If it does break above 72 and we get a close, then all of a sudden that sentiment will change. And we'll probably start to see some more upside movement here, but time will tell. Now, Marsha says, but positive news on stablecoins. Sure, stablecoins are going to be a part of our society. It's already, the Genius Act has already established that. It's just how does it get done? One very interesting thing on the panel discussion was hearing that some companies have already built out their stablecoins and are using them internally. Tony Edwards, who has the Thinking Crypto podcast, he was talking about how he interviewed the CEO, I think it's the CEO of Sony, and they have their own Sony stablecoin already. And I didn't get a chance to dig deeper into that, but when I bring him on the program, I will. I would love to know, why does Sony have a stablecoin, right? What's the use case for it? And that might give us some insights as to how other companies may develop stablecoins and what is the utility going forward. One of the questions I think that we're all going to have to answer at some point is, what do we do with this proliferation of stablecoins? Because you're going to have them from pretty much every financial institution. You'll have them from other businesses. I mean, Abercrombie and Fitch and Amazon and Walmart are all going to have their own stablecoins in an attempt to keep you in their financial ecosystem. Well, how does that work, right? How does it get so crowded at some point that we don't even know what's going on with all the stablecoins we have? So all in all, yes, I would think that there is some very good news there, but there's also a lot of uncertainty with regards to stablecoins and how does this new asset pan out? How do we see the expansion unfold? And is it a total cluttered mess? Is it very organized and easy for people to understand? Because remember, the average American is not you. You guys are not the average Americans, right? You are way more financially literate and understand crypto, stocks, options, futures more than, I'd say, 90% of the population. So when stablecoins come around, we will be showing them here and working on them here, and we'll be like, okay, here's how they work, here's the functionality. You guys will be way ahead. But your brothers, your sisters, your nephews, your kids will probably know, but your relatives are going to go, what the hell is this? I'm totally confused here, the stablecoin thing. And hopefully it doesn't inundate them so much that they just get flustered and decide to leave the industry altogether. Jeff, oh boy. You're a Diamond Hands AMC ape. Please tell me that's not true. Oh my gosh. Please tell me you're not a Diamond Hands AMC ape. Because your chart here, I mean, come on. We said this long ago. I didn't think movies theaters would go away per se, but AMC is slow horse at the glue factory. Man, bad. Real bad. Okay, you guys have a whole bunch of comments in here. Rick says, Merlin, somehow I came across your CNBC video, a breakout the bulldozers. Rick, that got me kicked off of CNBC. I had an earpiece in, and as soon as we went to commercial break, I was supposed to do 2 segments. As soon as we went to commercial break, they're like, okay, you're done. And I was like, well, don't we have another segment? They're like, oh, no, we're done. I'm like, oh, because they didn't want me saying really bearish things about the market. And in hindsight, I was right. I was pretty stoked on my results because I shorted the market when we broke that 1260 on the S&P. Long time ago. Man, 1260 on the S&P. Seems like just yesterday, and here we are, 6,000, getting close to 7,000 on the S&P. Wild. All right, what do we got here? I'm still confused on stablecoins. So what's the confusion, Steve? Maybe I can shed some light into the confusion on them. Right now, the only confusion should be, can these stablecoins pay out interest? That's the big hang-up in the Clarity Act right now. Ideally, they should allow you to pay. They should be able to pay out that interest for holding the stablecoins. But if they do, it'll be a direct assault on our financial institutions. It'll be a direct attack on banking in particular. Because remember, you can keep your money at Chase right now and earn 0.01%, or you can hold a stablecoin and make 3 or 4, maybe even 5%, depending on which brokerage firm you keep it at. So it could definitely pull money out of the traditional financial system. So let me know what area is confusing to you, and I'll hopefully add some clarity to it and clear out what might be unclear about stablecoins. But there's just going to be so many of them because the rules say that anybody can issue as long as they go through the regulatory channels, whether that's state or federal. I believe the number was, now it's been so long I can't tell you, but I think it was it's either 10 billion or I think it's 10 billion. If it's over a $10 billion stablecoin, it's regulated by the feds. If it's under 10 billion, then it's regulated by state authorities. You all can create your own stablecoin. Do it. money-making machine. Okay, since there are now Bitcoin futures, does that negate this limited supply theory of Bitcoin? No, it doesn't change the supply theory at all. It opens the doorway to leverage that marketplace. It also opens the doorway to shorting, which I think in theory should actually start to add more volatility to Bitcoin. Because when you only had people, you could just buy it was pretty much it. Now you can short it. You can short the ETFs. You can buy puts on it. You can also use futures markets. You can use DeFi and go leverage short significantly. So to me, I think that's going to be the big factor here, is the volatility that these new leverage instruments, as well as being able to short, add to not only Bitcoin but crypto overall. What would a Sony stablecoin or any other company be used for? Well, I guess the simple example, Stephen, would be for something like Amazon. With a company like Amazon, you're buying goods with cash, right? But I don't keep my cash at Amazon. I keep it on my credit card, which is linked up to Amazon, and every time that I make a charge, it hits my credit card, and Amazon, takes their payment. If Amazon came out with their own stablecoin, then I could buy, let's say, $1,000 worth of stablecoins, and I would keep that over at Amazon. So now Amazon has technically another $1,000 in cash on hand. And they can take that $1,000 in cash as they're supposed to. And a stablecoin member has to buy three things: treasuries, cash deposits in registered American banks, and repo market. By doing that, that allows you to earn about 3.5% interest. So now Amazon could technically get about 3% interest, 3.5% interest on all of the money that we keep there in stablecoins. So who regulates stablecoins? As I just mentioned, $10 billion or less stablecoin will be under the state laws. If it's over $10 billion, it's going to be under federal laws. So here we go. Let's see. QQQ. We're dumping now? Is that what's going on? Oh, yeah. Let's bring up our 5-minute time frame here. It's not dumping that bad. It's rolling over, but it's not cratering. Not anything there. Let's see. Roughly a third of Sony's global revenue comes from the U.S., and customers currently use U.S. credit cards to pay for PlayStation games, subscriptions. Yep. So when you use a credit card, so let's say you guys swipe your credit card at Amazon or wherever, Home Depot, you swipe your credit card. How much money out of that transaction, what percentage of that transaction does the company lose? So the company, let's say I buy $1,000 worth of goods at Amazon. What percentage of that $1,000 does Amazon lose? Anybody? What percentage does it literally take away from them immediately? Remember, you have three participants here. You have the bank that you use, you have Visa, and you have the bank that Amazon uses takes a cut. Right now, it's about 3%. So 3%. Code just says 2.6. Maybe it dropped a little bit. The numbers I saw from Jack Mahler, who was really up on this one, it was like 1% from your bank, 0.5% or 1% from Visa, and then 1% from their bank. So now think about it. If Amazon can get their stable coins, which allows them to do the transactions for essentially free, they now save 3% per transaction. So Amazon's net revenue will go up 3% if you're using their stable coins. Not only that, but them holding those stable coins for you, they can earn 3.5% interest. So in a nutshell, if Amazon has a stable coin that their customers use, they're going to be making about 6 to 6.5% extra for doing the exact same business operations. That's where the valuations come in. So I think this is really interesting for businesses that do understand how to implement stable coins. It could be a real significant one. And Dan says, and they pass that savings on to you. Yep, that's totally true, right? Yeah. And they jack their prices up by 3% to offset that, right? So now the profit margins for Amazon or companies that use stablecoins, I think, will start to increase significantly. Are they insured like bank deposits? At this point, no. At this point, they are not. Since stablecoins are pretty much the exact same thing as money market funds, it does beg the question, do we get FDIC or SIPC protection on them? Maybe at some point. Since they are, there's treasuries inside of them. They're 1/3 treasuries, or some portion of it will be treasuries, which those should be safe as can be. You have bank deposits in there, which is cash, which is insured, and then you have the repo market, which is a different ballgame. But no, at some point, I think we will start to see regulation and insurance on those, whether it's FDIC or SIPC. So, for example, there's this one called BUIDL, BUIDL. BUIDL is a money market fund put out by BlackRock. It holds the exact same things as a stablecoin. Internally, what they hold is 100% the same. Exact same in investments. One of them is a security. One of them is not. Right? A stablecoin is not considered a security. Whereas that BUIDL, which is a legal product in adherence with all regulations and KYC, know your customer, and AML laws, that is a security, and therefore it's treated like one. That product gets SIPC protection. So at some point, there will be some clarity on that, whether they do get either FDIC or SIPC protection. When that happens, I think a lot more people, like yourself, Marcia, are probably going to go, okay, now I'm comfortable holding this stablecoin because I am earning yield on it, and it's insured should something happen on the back end. Maybe Amazon will accept Sony's stablecoin. Maybe. I need to look into that to see what blockchain Sony's is built on, right? Because one of the things we're going to experience is interoperability. Which stablecoins talk to which stablecoins? Remember, I can build a stablecoin on top of Solana, and I can build a stablecoin on top of Ethereum. Those do not talk to each other. They don't speak the same language. But if I have a stablecoin on, let's say, Ethereum, and I have a stablecoin on Tron, or a stablecoin built on top of BNB, which is Binance's blockchain, those are both what's called EVM compatible, Ethereum virtual machine. Therefore, they can theoretically be swapped from chain to chain. Sony also launched its own Ethereum layer 2 blockchain. Okay, cool. And there you go. I did not know that at all. But I think, Dan, you followed me long enough to know I keep talking about how Ethereum, I believe, is becoming the standard as more and more companies are building on top of it. If Sony's building on top of Ethereum, their stablecoin will be interchangeable with Coinbase products because Coinbase is on Ethereum too. So very cool, huh? To me, this is the trend. This is the trend. You're going to see more people building on Ethereum. I think within a few years, Ethereum will be the backbone, will be the standard, will be the HTML that all the public blockchain stuff runs on Ethereum. Now, there'll be private networks, right? Just like there's private internets for companies. But the public stuff, I think, is going to run on Ethereum. Where does Circle come into the mix? So Circle started on Ethereum. Circle was exclusively an ERC20 token, but now Circle has branched out to, I think there's 16 different blockchains. Don't hold me to that one, but I think Circle is now on 16 different blockchains, like Solana and BNB. So they were smart enough to say, let's put our, we want to make sure that Circle stablecoin is accessible to everybody on different marketplaces. So they are on multiple chains. Just like Chainlink, right? Chainlink is an oracle. Let's give our services to all the blockchain. All right. So here is my updated, is this updated? No, this did not. Shut up, Koja. Get out of here. I know you're joking and pulling my leg, Koja, with thoughts on XRP. I need an automatic play button. I'm going to make a video that's it. That's done, Coach. I'm going to make a video that says when someone says, what are your thoughts on XRP? I'm just going to hit the button and hit play. Then I'll make it like a 30-second video. Mark my words, I'm going to do it. That's great. Okay, so I had an interesting trade here on Coinbase. Just, I got stung the other day, last week. It was like a $20,000 hit on Coinbase, which was not that exciting. Wasn't happy about that. But I was watching it the other day, and this was, going back into Friday's session? No, this was on Monday. So I guess time flies when you're in Vegas. You'll notice back here, there's this little, for those who are Trading Academy graduates, you have just a serious move up. And basically, it paused for a second and then just ripped to the upside. So you've got this 154.32 level. And I set an order to buy 1,000 shares there, just not really thinking about it. I'm like, okay, if it gets down there, and that was done on Friday, where I was like, okay, I'll just place this order in the system. And so I left it as a GTC order. I left it as a market, so it only is going to work during regular market hours, not after hours. And as that market opened up, this thing came down in the opening hour of Tuesday, and then it just came down, it kissed it, and then ripped right back up. And I was very stoked at what's happened over the past couple of days, because obviously when you have 1,000 shares that you bought at 154 and it's now at 182, it erased pretty much all my losses. Now, when yesterday, as we were like spiking up, the momentum was so good. The move I just didn't think was legit. I just felt it was kind of a bogus move, and why would it rally that much, right? So I'll put another line here. I sold calls against this at 197.50. So let's put in the 197. And only reason I did that is momentum was moving so good. And by the way, this was 197.50 expiring this Friday. So I sold those, and here's the two I have on right now. These are the two positions I have. These are both covered call positions on open positions I have right now. So just giving you a little bit of an update. So I clicked a $1.05 on that one, and then I subtracted that from my average entry price, which now makes my entry price 153.27. So doing pretty good on that, even though it's down another buck in the after-hour session. We'll see how that one goes. Tesla, I did not update the dollar cost average today, but on that one, I sold out next week. So let me bring up next week's for Tesla. I don't want to get rid of my Tesla. I think Tesla's going to do pretty darn well here. So I had that 132.50s. You can see that up at the top there. I resold those ones again at expiring not this Friday, but next Friday. So next Friday, the 6th of March, that's when those expire. And I clicked at 380 on that, which is almost 1%. So even though it's way away from current price, if it gets there, fine. I'll probably buy them back if it gets there, but I don't think we'll get there by next Friday. So anyway, just want to update you on two new trades that I was in. Other things. So let's see. So Monday, I'm going to be pretty gassed. I'm going to be a really tired show on Monday. I have I'm teaching my crypto focus class all day, and it ends at 1:30, and then I have very little time to prep and jump in here to do this. So just expect me to be a lazy show and my voice rather hoarse on Monday. Tuesday, I cannot do a show for you guys on Tuesdays. I will be in Woodland Hills, Los Angeles, doing a kind of a promotion for the new crypto program that we're doing, which is going to be physical in center. So I will be there doing a session in the morning in Woodland Hills and a session in the evening in Woodland Hills, and then coming back. And I think it's in April. So in April, I'm going to be teaching the physical 4-day class up in Woodland Hills, 4-day crypto class. That's going to be all day, Monday, Tuesday, Wednesday, Thursday, Friday. So I won't be there as well for classes. All right, just throwing it out there. Let's see, what do we got from an economic perspective? You look at the tail end of this week here. We're almost done with the month of February. I'll scroll you down here to our Thursday sessions. This is what we had today. Just unemployment claims, which is slightly ticked higher than our previous number, but lower than expectation, but no big deal. As far as information for tomorrow, you can see we do have core PPI numbers coming out tomorrow, and that is expected to drop significantly. You can see here the month over month, they're expecting it to go from 0.5 to 0.3. Okay, I don't know where you're getting your data from, but that's at least what the expectations are. You also have construction spending numbers coming out. You have Chicago PMI, and that's pretty much it for the earnings front. Now, the economic announcement front. As far as earnings go, I'm stuck behind a big ad here, unfortunately. So let me see if I can get around this ad. These darn ads. So here's what we got cooking for Friday. Berkshire Hathaway is pretty much the only company on there worth anything. Well, no, that's mean for me to say, but at least the big name company there are reporting earnings at $1 billion and trillion dollar market cap. But yeah, they report earnings tomorrow, and we'll see how that one all pans out. Jeff says there is a Merlin token, MERL. I wonder who it could be. No, mine is not listed. So there is a Trader Merlin coin. I don't know if it'll actually show up. Let's see. I don't know if it's actually listed here, but I actually created a marketplace for Trader Merlin tokens, and I just did it to test out what it would look like. But let's see. No, so it's not showing up Trader Merlin anywhere. But I did have, there's definitely people impersonating me, but I do have. Let's go Dex Scan, Trader Max. There is a Trader Merlin. I've created it, and I've actually funded it with some money. So I put money into the account, and there was liquidity on it, but it's on BNB. It's on Binance's blockchain. But man, there's all kinds of Trader Mayan, Trader Merlins, but no. Fear Merlin chain. Yeah, I wish. Jeff, a $90 million. Actually, if the Trader Merlin coin all of a sudden had a $90 million market cap, I would feel really bad. I'd feel really bad because the Trader Merlin coin has no utility. It has no value. There's nothing that it's not designed to do anything. I just did it as a test. Now, ultimately, if I had a team of people who were smart around me and some production, I'd love to find out a use case utility prospect for the Trader Merlin coin and actually start a real coin trading. I just want to make sure that there's something of value for the user as opposed to just some scam meme coin that makes me money. That's not right. So anyway. Okay. Like 18 million other coins have no utility. Yeah, more than that. You look down here at the bottom, it's 35.78 million. Watch this. Just keep it. I'm going to write down. It's 35.78 million. The bottom left-hand corner of your screen there, you see it. It's 35.78 million. And that is for today, which is 2/26. I'll write this down next week. I'll bet you there was over 1 million created between now and next Friday. It's wild how many are created every single day. And most of them, as you know, are garbage. Most of them are scams, and that's why you got to be so careful. All right, that's going to do it for me, everybody. I'm going to run. Tomorrow, I have no guest, but once the dust settles, tomorrow's Friday. And I will have a glass of whiskey. I will have a glass of whiskey tomorrow just because celebratory. Vegas was, I don't like Vegas. Vegas is not what it used to be. For those of you who have not been to Las Vegas in the last few years, it sucks now. Vegas is absolute garbage now. It used to be I could go play blackjack for 30 minutes or an hour playing $25 hands, and they'd comp me a breakfast. It used to be I could play a slot machine, they come by and give me a free drink. It used to be I could go to a bar and buy a cocktail for $5. Now a cocktail is $40. Every drink costs you unbelievably. I went to dinner with a girl on Tuesday night, and we had a decent dinner. It was a nice dinner, and we didn't eat that much food, and it was like $200. We didn't really. I had a beer, nothing wild. Whereas I can go down here to Din Tai Fung down the street and get stuffed with food for $120. Vegas is just absolutely out of hand right now. It's no longer the fun, cheap, crazy place it used to be. It is just a capitalistic monument that's trying to make money on every single thing that they do. So be careful. Never been a gambler. Vegas is never a destination. They have amazing shows. Definitely would encourage you to go to see some shows. If you ever go, let me know. You got to let me know how thick your skin is, how well you can deal with comments. But I got a couple of shows I think are absolutely fantastic. You should go check out for fun. But anyway, 80 degrees in San Diego Beach is Big Eb. Oh, this weekend I'm looking forward to sitting on the beach. Yep. Dan says the only one thing I want to see is the Sphere. I've been there 8 times, and I'm going to go 3 more times in April. Yep. If you want a really great show, and I mean it's a great show. It's one of the smallest venues in Las Vegas. But if you don't deal well with profanity or sexist remarks or to some extent racism, the host of the event is this chauvinistic Frenchman who is just vulgar and rude but it is so funny. It is so good, and the performances will leave you literally on the edge of your seat holding your breath that you think they're going to just die on stage. It's wild. It's called Absinthe. Absinthe is in front of Caesars. That's right. It's like a circus tent out front. So if it's a really cold night, don't go. You'll be freezing. Carrot Top? Oh, man. I don't know about Carrot Top. That guy's washed up. I like all the Cirque du Soleils. I like all the Cirque du Soleil stuff. It's just really exciting. But, most of the Cirque du Soleils are so big and so grandiose that if you're sitting far away, it's just not good. That's why Absinthe is so good, because it's really small, really small. But you better just understand it's going to be raunchy. It's going to be raunchy. The Floyd fight is going to the Sphere. Yeah, who cares, Ollie? You got Floyd Mayweather, which we all know he's not going to fight. He's going to run around with his head touching his shoulders so the guy can't hit him. And you got Manny Pacquiao, who's going to be in a wheelchair. I mean, this is like Mike Tyson versus Jake Paul. It just is a stupid show fight. I hope that nobody pays for it. Please, tell all your friends, nobody pay for that fight. Let's make it a failure, a flop. I hope nobody goes. I'm tired of these athletes that don't do a damn thing. Floyd Mayweather is a joke. They say he's one of the best fighters ever. He's not a fighter. He runs. He runs away from people. Who's a great fighter? Canelo Alvarez. You know why? Because he stands in the ring and he throws punches. He drops bombs. Anyway. They're actually going... Oh, well. All right. Enough. You got me my soapbox. You guys are trying to stretch me into an hour. It's not going to happen. All right. I got to go. So let me know what you want to talk about on tomorrow's show. You can email me at tradermerlin@gmail.com. That will be the the outlet for you guys. And if there's something you want me to cover specifically, let me know. As it stands now, Nvidia's earnings were phenomenal. They were great. Of course, Nvidia is getting absolutely clobbered. It's up a little bit in the after-hour session right now. It's up 9 cents, but that just gigantic red candle there, to me, doesn't do it justice. I think that Nvidia really deserves a pat in the back for their earnings, and maybe with a little bit more down move, we'll have some buying opportunities. So thank you, everybody. Send in your comments, questions to our YouTube channel or down to my email at tradingmerlin@gmail.com, and I will see you all tomorrow. Take care.